Hello, my name is Eddie Tofbig. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of Paris milling wheat, Minneapolis wheat, and London UK feed wheat. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, Paris milling wheat. The key pattern here, unlike the American markets, continues to be the purple highlighted mid-March to mid-May shallowy bearish shift pitch fall. The market right now in between the purple middle time below, currently 185 3/4, and the purple upper time above, currently 197 1/4. However, this is not the only pattern that is seen in this market. You see, we also have two other patterns, both rectangle patterns. The first is the older September to November 2025 rectangle between the congestion around the combined March 24 and September 25 lows at 187 3/4. Specifically a congestion between 186 3/4 to 187 3/4, and that is the bottom of the rectangle. The top is a congestion between 197 1/4 to 198 1/2, containing the July 21 low at 197 1/4. The second rectangle pattern is derived from the first and utilizes the same base as a closer topside based around the flatlining mauve medium moving average, currently 192 1/2, so significantly narrower. The purple upper time has now dipped below the top of the larger rectangle pattern, but it will not be until the middle to late March before we see it test down to the March 21 low at 191 3/4, which sits just under that mauve medium moving average at the moment. I do not expect we will have to wait till then to see some definitive action, so please be prepared. I should add that we're also on the verge of making this week a weekly key reversal, a possible weekly key reversal up, so let us see. Minneapolis wheat. The market here, which looked somewhat different when compared to Chicago and Kansas City, is now looking in some ways more common to Paris milling wheat. However, first, I'd like to look at the larger picture, and here we still have an extension to a large pattern I spoke about 22 weeks ago, and ever since, when I said, and I quote, "We're also possibly on the threshold of a really big pattern, a December 24 to date possible cat's ears pattern. This is a bearish pattern, but discussion for this, which I've postponed for a couple of weeks, may be coming up and real soon, as we are about to trigger the downside opportunities of such a pattern. Is a long-term pattern, but I urge you to keep remembering this idea, as if we travel and stabilize at lower than when we are, I may feel obliged to deploy it, along with all its ramifications." End of quote. Now, I still stand by this, for now at least, as this pattern has been ready for deployment for so long, yet still has not been deployed. We're nevertheless still reasonably close to triggering this pattern, though not quite there. I had hoped the bearish pressure from the purple July 23 to date downtrend, currently at 567 1/4, might push it lower, as it did back in late June and again in early July last year when it capped the market back then. However, this was not to be, as in Christmas week prices pushed up through this purple downtrend, enough that I'm thinking of either realigning or retiring this downtrend completely. I'll ponder on this some more. However, prices pushed up through it, and then over most of January rode along the top of the purple downtrend, making a small bear channel, until the middle of last week, when they shot up through it, only to be capped, as they were over Christmas, by the slowly declining gold long moving average, currently at 594 1/4. The question I have now is the same I had 2 weeks ago, when I said, and I quote, "Question was and is the break higher at Christmas a false break or not?" Right now it does not look like it might be, but we still have maybe another couple of weeks to find out for sure. This leads me to what has developed since September, really since mid-October, and that's a possible sideways rectangle pattern between the uptrend below and just under the gold long moving average overhead. This might become the immediate pattern to watch for once we are past the crossover of the uptrend with the downtrend. End of quote. Well, this is what has happened, and we're now in a sideways rectangle pattern, currently 569.5 to 594.25, between the dark blue September 2019 today uptrend below and the gold slowly declining long moving average overhead. Okay, so London UK feeder. Okay, so there had been on this daily chart until early July last year and running for around a year, one major significant pattern here. A pattern that we have not seen in the other grain markets, and a pattern that even now in 2026 still have on my daily chart because of its longevity, its earlier defining role of the market. The pattern is the bright red late May to early July 2024 bearish shift pitchfork. In early July last year, due to changeover, we had a very large gapping move higher, up and out of this pattern, up beyond the now broken bright red upper time. It's currently at 153.95. Now, added to this upper time back then, we had up higher up the important 50% absolute Fibonacci line at 180.5. And you had there, and even now still have, an area overhead that is a significant resistance, as it capped the market on its rise back in July, with some added nearby help at the time from the purple July 23 to date downtrend, currently 174.45. Since that peak, we've seen prices ease lower, moving eventually below all the moving averages and penetrating as recently as Christmas week, but not managing to stabilize below the previously mentioned bright red broken upper time. What is more important here, and this is key, is that we are establishing the market longer term, establishing the market below the very, very important dark blue neckline extension on my daily chart, which is currently at 168.70. A neckline to a pair of very long-term patterns, which I will shortly detail. Now, I also drew some weeks ago a bright green, late January to mid-July, quite shallow bearish shift pitchfork, to hopefully show the newer bearish angle of attack. In this pattern, the market is in between the bright green upper time above, which is currently at 175.40, and the bright green middle time below, currently at 152.80. To be honest, this pitchfork has been disappointing, and as I said 4 weeks ago, and I quote, I really don't think this pattern adds much to the conversation right now. End of quote. This all leads me to my final points, the same points I've been discussing here for well, it will soon be coming to a year, as some of them were something that I noted back in my annual commentary back in January 2025. To see these, it's best if we switch to my longer term monthly charts. Firstly, I saw back then the potential for a very large May 23 to date cat's ears pattern. This is a bearish pattern. It's akin to a double top, but formed after a big fall, such as the fall we had in early 2023. As well as this, we have an even longer term second pattern, an August 2020 to date, very large head and shoulders top pattern. These two super long term patterns both rely on one single feature, and that is their common neckline, highlighted in purple on my monthly chart. It's currently 168.70, the same as on the daily chart I just spoke about. Thus, from these two longer term bearish patterns, we have a primary target X3 for the bearish cat's ears pattern would be down in the 127.5 zone, and a secondary harder to reach target X4 down in the 112.85 zone. For the head and shoulders top, we'd have an even longer, well lower I should say, primary target X5 down in the 64.70 zone, close to where sits the oldest uptrend I have on any of my 200 or so charts, and that's the 1975 today, yes, the half-century old uptrend, currently at 66.10. I'm not even going to give you my secondary harder to achieve target for this pattern, as it is below zero. Please, please, please bear in mind that these are very long-term targets, stretching possibly over many years, but they are still targets below for these patterns above. Now, that all being said, July 2025 with changeover threw a major spanner in the works for such longer term patterns. The reactionary immediate countering monthly key reversal up for July went back above the purple neckline, but stopped at the 50% absolute Fibonacci line at 180.5 and just under the bright green 2023 to date upper bear channel line, which is currently at 175.90. The question this posed, and is a longer term question, is whether this was just a reactionary single month move higher or the beginning of something else. Once again, as in my previous commentaries, I will continue to stick to the reactionary single month move higher, as the action even now does not look like forming a strong enough base. Not yet, but I am prepared even now to start looking at the possibility of a new base of support. There is one caveat to all this basing higher idea, and that is one I've already mentioned, and that's the bright green mid-2023 to date big bear channel, which is currently 128.30 to 175.90. Even with such a big reactionary move back up, we are still sitting within this big bear channel, and it does have the advantage of already having had at least the minimum 5 touches necessary to legitimize it as a bear channel. For all this discussion, we're still dealing here on this monthly chart with some very, very long-term patterns, and you should please bear that in mind. Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpick and ADM Investor Services International Limited. And here comes the final important bit.